Have you ever wondered how companies make profit? Or have you wondered why some companies make a lot of revenues, but they make a lot of losses also, especially in the startup space? And have you ever wondered how to read the financial statements of companies and make sense of it? Hi friends, hope you're doing good. Welcome. In a recent video, I had combined my passion for jumping rope with my profession in financial services, and we had presented KHK 360's Q1 jump performance in the form of a balance sheet. I personally enjoyed making that video and sharing it with you, so I thought why not one more video along the same lines. In today's video, we'll talk about another important financial statement, the income statement. It is also called the P&L statement, which stands for profit and loss. We will understand the income statement in a fun way, and we will build it grounds up, level by level. For the purpose of this video, we'll talk about a fictitious jump rope company. The jump rope company's name is BRITW, B-R-I-T-W, and it stands for Best Rope in the World. Sounds good, right? And for this company, BRITW, we have some information with which we'll build the income statement. BRITW sells about 200 jump ropes on an average every month, and each jump rope they sell for $50. So we can say that BRITW deals in premium jump ropes, because we have seen and used other jump ropes which cost a fraction of this $50 but perform very well. So 200 jump ropes per month, 12 months, 2,400 jump ropes are sold in a year. Each jump rope is being sold at $50, so that's about $120,000 per year of revenue. Sounds good, right? But let's drill down further. The next piece of information we have is that this company, BRITW, buys its jump ropes from an overseas company, possibly in China, and they buy it at $20 per rope. So they buy it at $20, sell it at $50. Sounds like a great business, right? Let's not get ahead of ourselves. Let us go step by step. So 200 jump ropes, 2,400 jump ropes, they buy it at $20 per rope, which is $48,000 per year. The cost at which they buy the jump ropes from the overseas supplier in China up to their warehouse in the local area is what is called the cost of goods sold, the direct cost involved in the product they are selling. So what we have seen so far is a revenue of $120,000 and the cost of goods sold of $48,000. The difference of these two, the revenue minus your cost of goods sold, is what is called the gross profit, or GP. So $120,000 minus $48,000 is about $72,000 is the gross profit of this company. Is it time to celebrate? Not yet. There are many more lines which come in the income statement which needs to be factored in. The next category of expenses the company incurs are those expenses which are needed for the company to function or operate. These are called the operating expenses. The information we have about the operating expenses are the following. The company has a small warehouse where it stores all the ropes before it is sold, and a small office from which the staff operate. And the company is paying a monthly rent of $1,000 for each of these premises, for the warehouse and the office. So on a 12-month basis, we are talking about $2,000 per month into 12, $24,000 towards rental. Next, the company has 3 employees or 3 staff. Each staff is being paid $1,000 a month. So that's about $3,000 in salary cost per month into 12 months, $36,000 of employee cost per year. Selling a product in a competitive world is not easy. So what do you need to do? The company spends money in marketing, digital marketing, physical marketing, customer meetings, a lot of stuff. And they spend about $10,000 a year towards marketing. Other than these major expenses, the company incurs miscellaneous expenses towards a lot of items like electricity, water, consumables, etc., etc. This is about $5,000 per year. With this information, let us go back to the income statement, fill in these numbers and complete it. We have the revenue of $120,000, from which we net off the cost of goods sold of $48,000, and we get the gross margin of $72,000. From the gross margin or the gross profit, we keep reducing the operating expenses line by line. The total operating expenses are $24,000 towards rent, plus $36,000 towards salaries, which is $60,000, plus $10,000 towards marketing, which is $70,000, and miscellaneous expenses of 5,000. The total operating expenses is 75,000. So 72,000 of gross profit minus 75,000 of operating expenses. The company, end of the day, generates a net loss of $3,000. You would have noticed when we started making the income statement, all of us got excited with some headline numbers like the company is buying a jump rope for $20, selling it for $50. We said, wow, what a great margin. Or we got excited looking at the gross profit of this company at $72,000. But as you drill down into the income statement and reach the last line, the net profit, you saw that after all the efforts, there was a loss of $3,000. So that was a small demonstration of an income statement at a very basic level. There are a lot of other expenses which we haven't spoken about at all. For example, in case the company has got a credit line from a bank or a borrowing from a bank, there will be finance cost or interest cost. We're not talking about it at all. In case the company has invested in a lot of assets, maybe a very good storage solution or a good online portal for online sales, there will be something called depreciation which needs to be factored in. And the third point, the topic of recent times, tariffs. If there are tariffs, the cost of goods sold will increase. So the company has the option of either absorbing the cost or passing it on to the customer, both of which are difficult choices the business owner has to make. So what's the key takeaway? Running a business, especially when you're looking at the financials, is no walk in the park. When you look at it from outside, it is all profits and sunshine. But when you drill deep is when you see what are the challenges a company is facing. This is where entrepreneurs or business owners use their business acumen and creativity to control costs, improve margin, improve sales, and turn in a profit. Irrespective of profits or losses, running a business is one of the most exciting and satisfying experiences one can have. Now, I'm not a business owner or an entrepreneur, but I have great respect and admiration for people who run their own businesses. As part of my work, I have this good fortune of meeting entrepreneurs of different sizes, both small and big. After every interaction, I come out having learned something new. It is the people who make things work, entrepreneurs or business owners, who teach you stuff which you won't read in any textbook. That's it for today's video, friends. I hope you liked it. I personally liked making this video and sharing it with you. If some of you like it, it'll make me really happy. In case you don't like it, please do leave your comment or feedback so that I can improve myself. Till I see you in the next video, as usual, enjoy your jumps, stay safe, take care, and bye-bye.